Now, the important thing in connection with management information is, what do we do with it? Why does management actually collect information within the context of running a business? You can see here that relevant information is collected in order to plan. When we talk about planning, we're talking about putting together budgets, formulating the steps that have to be implemented in order to reach the objectives of the organization. Also, as one can imagine, information is collected in order to take decisions. Decisions cannot be taken in the abstract. They have to be based on a concrete reading of what's going on, and for that purpose one has to have good information about what the market is doing, what customers want to have, what the costs will be for producing things, and so on. So decision making is a central reason why management information has to be collected. And finally, the idea of control, or for supervision purposes, in order to monitor the activities of the organization as it goes along, to see whether it is performing according to expectations or according to budget. So these are the three principal reasons why management information is collected and used. Now let's just make sure that we understand what the main differences are between financial accounting and management accounting. Financial accounting, that's over here on the left. Financial accounting concerns the putting together of a financial presentation of a company for use by shareholders. For example, the annual report will contain the financial accounts of the business. This is for the public to be able to use. This is required by law. This has got to do with financial statements which are audited and then read by the public, by shareholders, by banks that are lending to the company, or really anybody who obtains the annual report of a company may want to decide whether or not they're going to invest in the shares of the company. Even competitors can obtain an annual report of companies and read and examine their financial accounts. Now, the financial accounts are usually audited, and they're presented in what we call a regulated format, which means that they follow certain rules and principles of accounting. So you could think of this as being more the formal side of presenting the company accounts. Now, management accounting is something quite different. This is for internal use, and therefore we can refer to this as being kind of freestyle accounting. Freestyle in the sense that the format of such management accounting doesn't have to follow general principles. It can be adapted to the specific needs of the business, and they don't have to be audited. What's important here with management accounting, the information that goes in, is that it should be accurate and it should be relevant to the needs of the business. A company is not obliged to keep management accounting reports. However, it's advisable that they do. A company which doesn't have a system of management accounting and focuses only on the presentation of financial accounting reports at the end of the year is a business that is in danger of not being able to plan, make good decisions, or to control their business. So remember these three key points. There is another distinction between financial accounting and management accounting which is very useful to keep in mind, and that is financial accounting deals with financial information, whereas management accounting is broader. Management accounting looks at non-financial indicators as well, in terms of how well the business is operating. Let's take an example. If you're in the fast food business, you probably want to be measuring how long it takes, so the time to produce a hamburger. Now, this is an operating efficiency measure which has financial implications, but in and of itself, it is not a financial measure. We're simply measuring how much time it takes to cook a hamburger. So this would be typically the kind of information which would be of interest to someone who is supervising the food production in the kitchen of a fast food or any kind of restaurant business, because the time it takes to get the food to the customer may be an important competitive angle that has to be taken into account by management. Now, just this is perhaps a little bit more theoretical, but just keep in mind, formally speaking, the distinction between data and information. Data is simply facts and figures. If we say that the population of the United States is about 300 million people, that's just data. But in order to convert that into useful information, we need to be able to process data into information, into understanding what that 300 million really means. In other words, how fast is the population growing? What's the age breakdown of the population? In other words, it's the processing and the analysis of the data for a specific purpose for management to be able to take decisions, to make plans with. So it's adding meaningfulness to the data. That's when the data becomes information. And keep in mind the importance of and the characteristics of good management information. Here are some features of good information, easy to understand because the mnemonic accurate is used. The first one being, of course, accurate. The information has to be, should bear some resemblance to the truth, otherwise management will be misled by incorrect facts. It should be as complete as possible. This is an ideal situation. You never have 100% of the information necessary to make a decision. Cost beneficial. The idea here is that the benefit to us of collecting the information should be at least equal to or greater than the cost of obtaining that information. It should be greater because otherwise it's not worth collecting such information. We hope that the information will be understandable. We've already mentioned earlier that the information should be relevant to the purposes of management. It should be adaptable. It should be able to apply it in manipulate it and work with it so it's applicable to relevant situations. We must be able to obtain it in time. Old information, old info is no info. If you don't know about something in time, you can't act on it in time, and therefore the information becomes useless. And it should be easy to use. Again, we want to emphasize the distinction between financial and non-financial information. And here we give some examples of non-financial information. We discussed that earlier. And of course, we should keep in mind as well the limitations of management accounting information. In other words, management has only so much time available, so they cannot measure everything that's going on in a business. They have to select the right things in the business that are relevant to the efficient performance of the business. In other words, very important that management prioritize and give due attention to the most important priorities and important bits of information that they need to have in order to take decisions. Information technology, of course, is extremely important to this end because it allows for a greater amount of data to be processed into information. Of course, the challenge here is to make sure that the input is qualitatively good, because if the input is garbage, then of course the output is going to be garbage as well. And there's also a question of relevance. Sometimes management spend an enormous amount of time using their IT systems to process information about things that are not relevant to the business. So it's very important to get the design and the content of the IT systems right. And we've also mentioned earlier the freestyle format of management accounting. The format and structure has to be developed according to the internal requirements of the users. That means of the employees themselves and management.